What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we see another high volatile sell-off in the stock market, and we're back down to that very critical support level. If we break down through this support, we could be going down for that next leg lower. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 1.52% and we're back down to that extremely critical support level at 428. If I zoom out here, it's very apparent why this is going to be such a critical support level, because you can see this giant head and shoulders formation on the daily chart. Now typically when a pattern is this obvious and everybody can see it, it does make it a lot less likely that it's actually going to play out, but you can't ignore the fact that this is going to be an extremely critical support level. And as you can tell, we have tested that level numerous times, and this was mostly a stop raid the last time we broke down through that level. So the next time we get a breakdown through that support level, it is going to look like a confirmation of the breakout, and it's no longer just going to look like a false breakdown and a stop raid. So respect this level at 428, because if we do break down below that level, it's very likely we're going to see SPY make that next leg lower, which more than likely means we're going to see SPY trading at $400. Now I'm going to zoom in here because you could very clearly see today's price action was bearish, and we very clearly still have a very strong downtrend. All of these moving averages are back to negative slopes and they're all stacked to the bear side. So if we lose this support level with such a strong bear trend, it's going to significantly increase the speed that we start to sell off. Now this is a market where a lot of people that wanted to sell already did sell, so there's still a lot of cash on the sidelines. So you can never rule out the possibility that any single one of these support levels could be strong support and we could get a strong bounce off these levels. Remember, I've told you time and time again that volatility does work in both directions, so don't be getting overly bearish at support levels. So the support levels you'll want to pay attention to on SPY are 428, 420, 411, and below 411 we're getting that breakdown in that next leg lower, and we're going down to close the gap at 400. Those are the only critical support levels I would pay attention to. Because the volatility is so high, I would not even pay attention to minor support and resistance levels. So watch those very critical support levels. And to the bullish direction, we need to see bullish breakouts back above 439, back above 442, and then eventually get this bullish breakout back above about 448. Because that will mean price action is back above the 50 EMA, and that will allow the price action to start reversing the bear trend. Remember that the trend is your friend, and you have to be very careful going against the trend, because the path of least resistance for the price action is going to be in the direction of the trend. So don't just ignore the fact that we're in a downtrend and throw all caution to the wind. You still need to have great risk management, and you need to be very cautious because this is a very volatile market. And as you can probably tell if you're trading, this is very whipsawing and there's bull traps and bear traps alike. So the path of least resistance is still lower until SPY can at least get back above 448. But really I would like to see SPY getting back above 450 and then holding that level as support. On the NASDAQ 100 triple Qs, we also had a volatile sell-off going down 1.53% today. But again, we're still sitting on top of that very critical support level at 341. Below 341, you have critical support levels at 334, 329, and below 329, we're more than likely going down for that next leg lower and fully closing the gap at 315. Your bullish breakout levels on the triple Qs are going to be back above about 352.5 and then getting back over the 50 EMA, which will be just above 362. There's a lot of volatility, so there's going to be a lot of price action swings from these levels. So watch that critical breakout above 352 or the breakdown below about 334 to 329. 334 would be about the equivalent of SPY 428, but 341 is also a very critical level, which you can clearly see we did get a bounce off of that level last time we were there. But you can't ignore the fact that this could have been a false breakdown, and this level of support does hold up. So even though we are in a strong confirmed downtrend, you still need to watch the price action, because the price action is king, and that's the only way to get instant feedback of exactly what the market's doing. Moving averages are a lagging indicator, and with a market this volatile, you really need to be on your best if you're trading this volatile market, and you need to know the price action levels, and you need to know exactly what you're going to do if a support level breaks down, and exactly what you're going to do if a resistance levels break down. If you're not willing to trade a volatile market, just sit on the sidelines and wait for the volatility to subside. Then you could come back in when the waters calm down and the market becomes a lot less volatile. That's completely fine, and it's completely your decision. Some people love trading volatility and other people absolutely can't stand it. Jumping over to the Dow Jones, we were down 1.82% today, and again you're seeing a common theme here coming down to very critical support and still in a confirmed downtrend. The Dow Jones strong support levels are 331.5, 329, and then right around 322.6. To the upside, the bullish breakouts in the Dow Jones will be back above 340 and then getting back above 347 and 349. So watch these very critical levels and follow the price action because it's very clear we're in a downtrend, so there's no surprise that we're heading lower. The surprise is going to be if we get a strong bounce off support and start breaking through resistance. Going against the trend is the riskiest trade you can make, but eventually the market will find a bottom and we will see more high volume buying. And for all we know, we could have put in the bottoms and we're trying to find the next higher low before we make a higher high. So don't rule out any possibilities because the volatility will work in both directions. And with all of the bearish sentiment, it's not going to take a whole lot of good news to really get this market moving to the upside. On the Russell 2000, we were down 1.88% and we did test that support level at 197 intraday and we did bounce and close higher for the day. We're still trading below 200 and we still do have a bear trend, so you still need to be cautious of more downside. If we break down below 197, look for a retest of 191, and below 191, we're likely going to start trending down towards 170. Your bullish breakout levels are back above 200, back above 207, and then your bullish breakout will be back above 212, so watch those critical resistance levels closely. On the ARKK ETF, we were down just over 3%, and you can see we did get a failed bullish breakout. Intraday, we were trading back above the bullish breakout look, which was back above 71, but we failed to close above that level, and we're back down to finding support on top of the 5 EMA. So your bullish breakout will be back above 71, and then getting back above about 78 to 79, and then ARKK will be looking a lot more bullish. To the downside, you have support at 64 and 60, and if we lose that support level at 60, we're more than likely going to see this bear market trending towards $50. On the VIX, we were up 10.5% today, and you see the VIX closing above 33, and as I continue to tell you, this is a very elevated VIX, which means there's going to be plenty of volatility in this market with bear traps and bull traps alike, and it is going to feel like trading a whipsaw. You have the full bull trend on the daily chart and you're starting to get a bullish breakout because we're now starting to see the VIX getting consecutive closes above 30. So be very cautious in a market this volatile, and usually when the VIX is spiking, there is the possibility we could be entering a bear market, especially if we start breaking down through those critical support levels. So we're getting a lot of warning signs that the markets are starting to weaken. So if we get the confirmation of the price action and the indices losing critical support, we more than likely could see the VIX spiking into the 40s as we go down for that next leg lower. On Bitcoin, we're currently up 1.58%. We see Bitcoin trading just below 44,000. We clearly have resistance right here, right around 44,600, and so far we're failing to close above that level. So your next bullish breakout at this point will be a close above 46,000 with support to the downside right around 41,500 and 38,700. If we lose any of these support levels, we're more than likely coming back down to 35,000 or retesting that support level at 30,000. But if the bulls can keep Bitcoin above about 41,700, we could easily develop a bull trend from here, get a lot of momentum, and then try to push and break out above that resistance level at 46,000. If you do get the bullish breakout, your next resistance levels will be at 51,000 and right around 53,000. On NVDA stock, we were down 3.72% today, and we did close just below 236. So we could be seeing NVIDIA coming back down to these support levels at 223, 209, and if we break below 209, you're looking for 197 and 192. We have the confirmed bear trend and we still don't have the bullish breakout. And at this point, the bullish breakout will be back above 255 and then confirmation of the double bottom will be the close back above 270. So look for those critical resistance breakouts to get bullish. Otherwise, respect the downtrend and look for support below. And if any of these levels start to break down, you're looking for a quick trip down to the next support level. On Tesla stock, we were down 0.7% today and we see Tesla still failing to close back above that resistance level, which is right around 878. Tesla isn't bullish until it can get back above about 937, but it's even more bullish if it can get back above that critical level at $1,000. Below 900, we have the confirmed double top with a price target all the way down there at 592 if we do break down below 700. So watch these critical levels and pay attention to the downtrend because we're below critical resistance with a confirmed double top with a confirmed bear trend, and it's possible we're coming back down and we're going to slice through these support levels. Watch support at 828, the previous low right around 760, and then the price targets are 709 and 592. On Apple stock, we were down just over 1.1% today, and intraday we did bounce off that support level at 162, but we still are looking a lot more bearish with negatively sloping moving averages. So if we start losing support at 162 and 160, look for a retest of 157 and then 153. Your bullish breakout will be back above 168 and then closing above 170 and then 172. Wait for confirmation of the bullish breakout because this could be the very early signs of a deeper sell-off and you don't want to get caught going against the trend. So just wait for the bullish confirmation or at least set your risk at these strong support levels so you don't end up trying to catch a falling knife. This is very clearly looking like a rollover look. So if we start losing our support trend line, look for an acceleration of selling in the Apple stock. On the financial sector, we were down 3.69% today, and we did close below support, and we're very close to having the full bear trend. The industrial sector was down 1.5% today, still holding above support, but still in a confirmed bear trend. The healthcare sector was down around 0.5% today, still in the bear trend, and still trading above the 5 EMA, and we still do have a gap to fill down here at 127. The energy sector was up just over 1% today, and we did get the second day in a row closing above the previous high, so it does look like the energy sector is regaining the bull trend and can start running to that next price target right around $74 to $75. This is very clearly high volume, and this is very clearly the bullish sector, so we could still continue to see the energy sector trending higher from here. So jumping back over to the S&P 500, this is definitely a very volatile market, and it's currently sitting at very critical support levels. And if these support levels do break down, we are going to see a much weaker market. And with the VIX starting to spike above 30, it's very possible we could be entering a bear market. So just be very cautious and expect more downside because the trend is your friend, and we currently have bear trends across the board. Don't be taking too many risky bets in a volatile market, and make sure you're using great risk management. Also remember, as a long-term investor, these are still great prices to accumulate at, but make sure you're in it for the long haul and you're accumulating as we go lower with money that you don't need anytime soon. Nobody knows exactly where the bottom is, but if we do break down, SPY 400 is going to be a very strong support level, so I would at least save some dry powder in the event that we actually do go that low. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.